Being far too early or too late with trading and investing can set you up for extreme failure, even if you've sat it out for years upon years in the market. As an example, over the last 33 days, Bitcoin has essentially gone nowhere when it comes to its price. It's been a stable coin at $96,000. However, we have seen a new all-time high and a complete scare with the biggest liquidations in history, flushing out over $2.2 billion. But as I said, in that time, the market has been relatively stable at $96,000. Now, in today's video, I want to have a look at the extreme events, the worst thing that we can do in these markets, especially if you are looking for the longer term, the longer term game here. It's still way too risky to be bearish than it is to be bullish. I've got data to get through with you. Hit the like, subscribe to the channel. It's your home of macro cycle analysis with me, Jason Pizzino. We've got the stock markets, economic data, Bitcoin, cryptos, and of course, we'll throw in the real estate cycle as well. I'm back home here in Oz after having a couple of weeks over there in Thailand. All right, guys, let's kick it off. Simple things first. Forex Factory, looking at any of the high impact announcements coming up for the week. Really not too much this week coming up for the US. The US is what's really going to impact the markets. 2 seconds for the Aussies. Cash rate coming up tomorrow. Everyone's hopeful of an interest rate cut. Previous 4.35, 4.1 is what we are aiming for. But over that last 3-4 months, my bank has put up my interest rates, because it's on variable, twice by 0.2%. So even if we do get the cut, I'm basically back to where I started. You might be in a similar position as well. Anyway, this week coming up, US, not really much going on. The biggest thing that has happened for the US are egg prices. New all-time highs for egg prices. Now, I only bring this up like partly as a joke. Obviously, we've got prices that are going up for foods here. People have talked about whichever administration culling healthy chickens. There's got to be a little bit more to it. It can't really be that simple, or can it? Now, I bring this up because I've been talking about inflation for many videos now. Maybe that's several weeks, several months. I think inflation will continue up. Yes, Trump will blame Biden and whatever else goes on there. That's not really the point. What's really going to affect us are the prices. And I've talked about inflation. We're seeing high prices here for eggs. We've obviously seen it for coffee at new all-time highs as well. Eventually, it's got to come down once these eggs, once these chickens are laid, chicken or the egg first, right? Once we get more chickens that are laid, then of course prices will come down. So you might be able to time that out. Maybe it's 1-2 years from now. Let's wait and see. But yeah, that's one of the big, I guess, lighter topics of the day. New all-time highs at $4.95, just above 2023's high. So exactly 2 years ago at $4.82. Now, on top of that, it is far more risky being bearish in these markets. The risk of a recession is still very low. So US recession model still evidencing very low risk of recession in coming year. Yes, we are seeing some inflation. You know, I've only talked about eggs and coffee in today's video, but I've covered many other commodities in previous videos as well. So another reason to continue subscribing to the channel, because each of the day's analysis builds upon the previous day. Now, in terms of a global recession, we're looking global recession model also evidencing very low risk of recession in coming year. The next thing here is being too early in the game. We know plenty of people in the space who are way too early and continue to try to short the markets all the way up. We've seen that throughout the bear markets. This particular one here is looking at the stats and the data for NASDAQ, so we can learn from history to, I guess, not to get scared out of any positions if we see some sort of crash. I mean, that's what I've been talking about now for many weeks, especially with the data that we see for Bitcoin and, of course, cryptocurrencies. But looking here, JP Morgan on trying to time the AI top NASDAQ 1 month early equals a 13% opportunity cost. So essentially, if you were trying to call the top of the tech bubble back in March of 2000, so right up here, if you're 1 month early, you would have lost out about 13%. If you were 3 months early, 31%. If you were 6 months early, 94% to the upside. So what does that look like? Well, there's the top. They're probably looking at the closing prices here. So let's have a look at the close of about 6 months earlier to that closing price. takes you somewhere around that 95%. So if you're too early in the market, that can cost you a lot of money. Sure, you can get back into the market. So that could be another option for you as well. If you're sort of getting scared out of the positions now with the market being a little bit turbulent, not as much interest, then, and that sort of causes you to want to sell because you're not feeling like this is a good position for you. And I say feeling because that's usually the emotion that we trade off of. Know that you can get back into the market. There is the possibility of much greater upside as well. But of course, it's trading and investing, and there are no guarantees in the market at all. Now, someone who continually sells, or at least we hear about it, is of course Michael Burry, with the famous tweet here on the 31st of January 2023 saying sell. And from that point, the markets have been up over 50%. So with Bitcoin, that would look like not much from the previous cycle. Pretty much not much of a difference there with 6 months, but the cycle before that was a pretty big difference. Now, I don't think the percentages are going to be something that we repeat in this cycle because they're pretty out there. If you look at the closing price from June 2017 to the closing price in December of 2017, that's 660%. Now, if that is to be the case here for Bitcoin at this current price, 6 months out, I mean, where's 600% lead us? Somewhere in the vicinity of $700,000. I think that's a pipe dream. I don't think we're going to get to $700,000 in this cycle. So the thing I want to focus on here are how many swings to the upside, or more importantly, is there still a big potential for a surge to the upside? Of course, 2021, there wasn't. There was a big correction, and then the market at least got back to somewhere around those highs. So you sort of had that opportunity to get out again after this significant crash. But we're at a different stage in terms of the pattern for BTC with this sort of significant correction. That correction from the peak down to those lows was about 50% in a matter of weeks. Just 2 weeks there, pretty significant move of 50%. I don't think we're also on the verge of a 50% move from here, as that would put us somewhere below $50,000. 50% loss would take you about 48K. And that would change the structure of this setup. It's, of course, it's not impossible, so you have to accept that it is a possibility. From what I've been sharing with you guys on the channel now for a long time, I think that's a low probability. So it's not impossible. I just think it's a low probability, and that would end the bull market. Like, that would be over. So yeah, I'm not trying to sit here and think that there is no chance of that happening. But in terms of what we saw in 2017, and I think we're sort of running towards this 2017 style setup with these movements to the upside, there are still some significant moves to the upside to be had and some nice clear trends as well. 2013, another example here with 6 months from the top. So basically, if you're too early to getting out of the positions, you sort of risk much more opportunity to the upside. 6 months in 2013, still about 800-900%. So I don't think that's possible there. 720% from the closing prices, and to the peak was 900%. But you still had a nice clear run of many weeks in a row. Timing wise, for the weeks in a row there, you had about 7 weeks of significant upside. So can you imagine sitting out of the market as it runs up hundreds of a percent for 7 weeks? That's 49 days, nearly 2 months. I mean, we see 2 months now, people can barely handle what's going on with a percentage change of less than 20% from the low to the high. Let me do it the other way around so I can get my numbers right. There you go, 16% from that high to the low, or low to the high is 22%. And it really freaks out a lot of the market. So I think the data and the stats speak for themselves. The risk is really still too extreme to be out of the market or to capitulate at this stage of the cycle. In addition to that, we have also been covering the 4-year cycle, but from the perspective of the low to the low, not the halving BS, not any other sort of cycle that people look at when it comes to this 4-year cycle, but more importantly, something that has stood the test of time, and that is your low to low. This type of analysis has been used for decades on many different charts, many different assets, many different asset classes, which to me is enough to say that it stands the test of time, as opposed to one chart. Like when people look at the Bitcoin halving cycle, I don't think that that is going to stack up forever. And typically the idea to that is around the halving or post-halving, whatever it might be, you see a new all-time high. I don't think that's going to be the case. And I don't know, we're getting closer to it now, but when we get to that next halving at around 2028, I don't think we're going to see that new all-time high for Bitcoin. I could be wrong, it's many years away, so let's see what happens there. It's three years to go. You know, should this continue up and we see some sort of high over the next, within the next 12-ish, maybe a little longer, maybe a little shorter, right? 12 months, and we start to head down to this next low. Maybe that next move to the halving ends up being a lower high, and then we fade out again, put in another base, and then it takes years from now to get to another new all-time high, sometime in the late 2020s or maybe even early 2030s to start to come back, to get back to whatever this all-time high is in this cycle. So being too early to get out or capitulating at the wrong times could be very, very costly in this market. Now, I want to flip gears just a little bit to get into the macro traditional finance here, as I still see further upside, even though the markets are still bearish. We had a neutral close, and then recently was a reading of 44 here. So the fear and greed index for the stock markets is fearful. And the investor sentiment, as I pointed out to you guys in the most recent video here, this little bit of a vlog-ish update, which you guys happen to like by hitting the like button, and your comments were very, very positive on seeing these sort of just something out and about as opposed to being in the office all the time. So this showed up as the highest reading for the bears in 52 weeks, a 1 year bearish high. AA members feel the stock market will be down, or they're the most bearish at the moment in the next 6 months, right? They think it's going to be down. I don't think that's going to be the case. And as we showed here, fear, we showed here, extreme fear. The stock market is within 1% of a new all-time high. It's putting in solid lows at the moment. It's above the low of the 13th of January. It's well above the Japanese yen trade low from August. It's a wall of worry, in my opinion, of course, and they are still getting relatively bearish, or they're still feeling bearish. To me, if you're feeling bearish now, and you're looking out 6 months from now, most people don't really know what's going to happen in 6 months from now. That's why we just keep following the charts. But you'd probably be investing with that in mind. In 6 months, it's going to be lower. Therefore, you're probably going to stay out of the market, even though the charts are saying otherwise. It's had a pretty good support so far. That's the S&P 500. The Dow Jones also finished off all right here. That's the end of the day. And it's been trading above 44,000 for several weeks now, still above each of those key levels, coming off 50%. Something else that has broken down, which is good for assets here for the stock market and for Bitcoin, potentially cryptos as well, is that we now have an update for the US dollar. So I'm going to change this for you live. There it is. We now have an overbalance in time. So this was the reading here from the top to the bottom. That has now exceeded to the downside. So you can see in terms of time, there's the top and there's that low. We have 32 days, whereas this one here was 14 days. So it's beaten that record, which means we have an overbalance in price and an overbalance in time. That's what it looks like on the chart. It started to break down from the major 50% level at 107. To me, it still needs to get back to these levels here. That's around 105, okay? You got the swing bottom there, 105.4, and the 50% level at 104.94. That is going to be another very key signal to say that potentially some weakness coming back here for the US dollar, and we'll begin to see some of the other currencies regain their ground. Just like the Aussie dollar's begun to regain its ground after these couple of lows here. It's risen relatively well from the bottom here. It's 60.8. It's up about 4.5%. Pound looks like it's had an overbalance in time and price, much bigger in price, and in terms of time, most likely as well. It's gone further in time than this rally here. Therefore, there you go, overbalance in time and price. It needs to get back past some sort of 50% level. That would probably come out around 128, and then break one of these significant swings here as well. So we'll start to see some weakness there for for the US dollar. Now, quick look at the tech stocks, as that's what this tweet was referencing here, basically arguing that the risk of being a serious bear on US mega cap tech is still considerably higher than the risk of being a bull. You can check out Nvidia here. It's starting to close the gap after the DeepSeek FUD that happened a couple of weeks ago now, nearly 3 weeks ago. Closing the gap there, back above 50%, and it still needs to get to around 149 to close or get back to that peak before the DeepSeek FUD that came out, right? But that's been relatively good, all things considered, where DeepSeek really started to flip market sentiment. Now, Bitcoin and cryptocurrencies are still in a bit of a doldrum here. There's not really much interest overall. You're seeing a lot of stuff that happens on socials, right? Everyone's still talking about meme coins and altcoins and sort of feeling like alt season's never going to happen. One way or the other, there's going to be something that eventually moves. I just don't really care if we're going to see a whole lot of degenerate shit happen or not. I still think the markets have got more time here, and then we'll start to see a significant move, as I've been talking about. I was giving it around sort of within 2 to 5 weeks that we should see some sort of significant low or that higher low begin to form, and then we'll start to move from that point. The data continues to speak for itself. Liquidations are very, very low here, just 100 million over the last 24 hours. And just a couple of weeks ago, we're at 2.2 billion. So a lot of things wiped out here. A lot of people wiped out. The exchange volume still very, very low and dropping now at 49.5 billion. And that is now lower than the averages back early, January? Yeah, because the US bloody dates here. Okay, it's below those levels, but still not as low as the 30 to the $40 billion that we saw before the election pump. So again, it continues, as we've been talking about, lower highs, lower lows. Keep watching to see if the interest actually comes back according to the stats and the data here, as opposed to just a whole lot of talk and noise on socials. 90 days worldwide Bitcoin crypto search volume. Bitcoin jumped up a little over the last 24 hours to 20, but crypto's dropped off from 12 to 11. So there is more interest being lost here in the last 3 months, 90 days. For the 12-month period, it's still flatlining here. The week to week, basically 19, and Bitcoin's dropped off to 32, but still above the previous lows here of, 12, 13, 11 for crypto. And for Bitcoin, it's still hovering around the similar numbers here. 27, this week it's down to 32. So that was pretty much high 20s, low 30s, still dropping off in terms of the interest. The fear and greed index, Bitcoin fear and greed index, the one that still works, and the one that has been working very, very well, not the coin market cap, which still works, but is more focused on cryptos, and the market moves with Bitcoin. That's why I'm more focused on this one as opposed to the coin market cap. I know people love to look at that or reference it. That would potentially be lower than this, but right now it's still sitting around neutral, and the sentiment is still resetting here. So as we've talked about, I think it still needs more time to reset, and it's not really sure. The market's not really sure whether it wants to push higher or lower because it's still in a trading range. We've gone essentially nowhere for the last couple of weeks. Taking a closing price from the back, going back to 5th of February to yesterday, or just the close that happened in the last couple of hours, negative 0.5. The price has really gone nowhere. There's been a lot of talk, but the price has essentially gone nowhere in that period. Still no breakdown of 90,000, or where's that low there? It's back at around 89,000 as well, and it didn't break above 102.5. And my key level, as I've been sharing with you guys, where's my chart here, is around 103. Above this top, I want to see consolidation above that level. So any sort of bounce here is still relatively weak in my books. I haven't seen any of the volume come back. The search terms here, the search volume still low. The fear and greed index is still hovering in that neutral, sometimes fear, sometimes slight greed. And the exchange volume is dropping off. Liquidations, everything is just pointing towards more of the same and more dead environment. Eventually, we should get that pickup, right? But even if we get that pickup, as I said, I want to see it close above roughly that 102.5, 103,000 for a round number here, and consolidate above that particular level. Otherwise, it could just be a bit of a bear trap, as I've talked about as well on the channel, and eventually a drop lower there. In uncertain times, it's fantastic to have risk-free positions for your portfolio, whether it's altcoins or any other asset that you're invested into. I discuss this a lot with TIA Premium members, and this is a review from someone who's actually doing it right now. First time profiting from prices going down, so they're just learning about the market, and all starting to click for me here. 50% of position exited on this particular trade, and the remaining is risk-free. And so I bring that up because being in that risk-free position allows you to have a clearer headspace overall with the market. When it comes to the next stages of the game, it's nice to be able to be sitting in a position that you don't have to stress about, and then you are free to then understand or make those decisions on when to start exiting, as opposed to always trying to be coming back from any particular losses. With that in mind, links in the video description for TIA Premium. Will be live on Wednesday morning with the members. Hopefully we'll see you there too. Now, next up is USDT dominance, which over the last couple of days has been rising here 4.5%, and it's bounced off that diagonal. That diagonal leads all the way back to almost the beginning of time here in 2017, from the low projected to the next lows here in 2021. So the two previous cycle all-time highs. Ideally, we should be seeing the action play underneath that level. For now, just slightly above. As I've been looking at, 4.8% is the first of the killer levels here that would basically kill the game, at least in the short term. And then above 5.2 is where we really don't want to see the USDT dominance get to, because that could really bring down altcoin and Bitcoin prices. For now, it's still in this trading range between 4.8 and 3.7. Underneath 3.7 is where we want to see the game get to eventually. For now, as I said, still in that trading range, but putting in slightly higher lows here. So could be some further downside there. The total cryptocurrency market cap downside for Bitcoin and altcoins, that is. So yeah, I mean, I've been looking through all of that data there. There's nothing really that has changed, at least even in the shorter term, to suggest that we could be heading up a little higher here. Now, the total cryptocurrency market cap is also pulling back slightly at 3.15 trillion. To bring in a little bit of hope here, I know people get sort of down, but I mean, I don't really care if this thing goes down. I still see longer term it's up, and it's just like a better position to enter. But why not? If things start to turn around from this point with these short-term higher highs and higher lows, well, then you're looking for closes above $3.3 trillion, which is also above this swing low of the 27th of January, and basically your 50%. See, it just cuts right through the middle of all of this price action. That's going to be putting it into a slightly stronger position in the short term to hopefully build upon that for the longer term. You can see back here when it was able to just get back above the 50%. In the shorter term, there was more strength there. But all it took was a few more days and the market was underneath it. So that's what I'm saying. In the short term, that's a good sign, at least for the shorts, to then, the longer positions in the short term to build to then tackle that all-time high again. Short term, it built, it tackled it, it got slammed back down, and then was unable to regain that level. That level is about 3.6 trillion. Therefore, it had to come back and test the next low. So if it's unable to get back above the level we're watching there at the 50%, then it's going to get tackled again, slammed back down to some of those lows. The same thing's been happening to ETH, BTC, for this entire bull run. Just keeps getting slammed back down. At the moment, there's a low in, but over the last week, it's been a very, very small week. Not much has really happened across the board for ETH, so really nothing to report on there. And the same deal for ETH USD. The same price levels apply, therefore I don't need to waste too much more of your time with explaining why ETH should be going up, why it should be going down. There is nothing here that is suggesting one way or the other, because it's basically been in a trading range. The levels we're watching, 2,900, and ideally this single low here at about 2,930, closes above that, going to be in a reasonable position there. Otherwise, coming back down to test 25, and the rest of the numbers you don't want to hear about. XRP, reasonable week there, but it was very, very weak volume on Binance. Good close there. Ideally, the next tackle is above 290 on increasing volume. Otherwise, it's a bit of a deflated rally here. And XRP typically can do a lot of deflated rallies before eventually it dies out. Overall, it's still in a much stronger position because it's still above the 50% at 180. But you just don't want to see these deflated moves for too long. Otherwise, they have to come back down to reinflate. Solana, similar sort of thing here. It's, well, actually not, worse than XRP. It's closing below this 50%, still above $150, which is the saving grace at the moment, if I can put it lightly. But apart from that, it's really in a rock and a hard place. Not much has happened in the last 7 days. As you can see here from the closing price, really just closed a little bit lower here. A few more red weeks, probably going to lead to some sort of intermediate bounce and then lower prices from there. And the 3-bar rule here has continued to play out. Lower high, lower high, lower high, lower low, lower low, lower low. You had a brief attempt above that price with a lower close, and the weakness has continued since that signal showed up back in December. That was the 3-bar rule showing the weakness for Sol. And finally here, SUI, actually one of the stronger ones, looking okay. Quick shout out to a channel sponsor, to SWYFTX, as I'm looking at a whole lot of altcoins here. They have over 400 cryptos. If you're in Australia, it's probably one of the best onboarding or the on-ramping experiences in crypto. Links in the video description, $20 free BTC. You guys know the rest. And if you want to be DCAing into cryptos, then they have their crypto investing on autopilot. So basically like an auto invest, but you can choose the altcoins that you want to invest into. Of course, have your plans in play, know where your stops are. You don't want to be continuing to DCA into stuff that is just dead and potentially not coming back. Looking at SUI here, nice close above 50%, again on lower volume because we have come off a pretty significant week, and that would be the same here for XRP. That week, pretty significant to the downside, reasonable close as well, and of course the last week is going to have lower volume because, well, the week before that took away a lot of the energy from the market. So ideally for these two here, you continue to see consolidation of prices here. The volume can get lower, but you just don't want to see it drop off too much or break the previous low set from the first week of February. For SUI, around 240. Otherwise, that just leads to further consolidation at lower prices. I think we've still got further upside to go here. Therefore, I'm not too concerned. I'd only be really concerned if we started to break down from previous all-time high positions, somewhere around that 190 to 220 for SUI. So I still like this area for any sort of quote unquote, some sort of DCAing, but I'm looking for better opportunities at this point based on all the analysis that we've looked at in the video earlier. Check out this video popping up on your left-hand side next. Links in the video description as I've talked about today, and I'll see you back at the next video. Till then, take care and peace out.